If the yen market were a scary movie, this is the point at which discordant music signals a growing danger. Everyone thinks the authorities are prepared to intervene at some point. They just don't know which door they're lurking behind. On Monday, the yen reached a new 17-month high, pushing the dollar back to 107.63 yen. Unlike the People's Bank of China, with whom speculators battled and lost in January, the Bank of Japan is a familiar opponent with an arsenal of well-known warnings, and that language is now key. According to Nomura, the most recent utterances rank as a 3 on a scale of 1 to 5. On Friday, Finance Minister Taro Aso talked about the economic dangers of excess volatility and disorderly moves, both are classic level 3 phrases. Warning that Japan would take necessary steps under certain circumstances, as he also did, is almost a level 4. A level 5 would be closely communicating with foreign counterparties. Beyond that, history suggests the BOJ would call some dealers in bank rooms to check the price with the aim of unsettling the market. Then comes intervention. By that standard, action is still a way off, but it depends on how fast the market moves. Japanese officials are in Washington this week for the annual IMF meetings, enabling them to potentially win backing for action should they so want to. The dollar at 105 yen is a commonly talked about line in the sand, but 103, which is roughly the average break-even level for companies, as calculated by Japan's Cabinet Office, that seems a more likely point for any action. Positioning data show long yen bets are hovering near 4-year highs, but leveraged investors have cut back their holdings for a second week running. That suggests some of the boldest money might want to take profits and just step back for a few weeks. Then again, post-fact justifications for the yen surprise rally are now coming in thick and fast. These range from its very weak inflation-adjusted level against trading partners to the unwinding of yen hedges by foreigners who are dumping Japanese stocks. And these reasons could embolden investors desperate to make up for a very dire first quarter. The BOJ and the Finance Ministry will need to keep very tight control of the script in the weeks ahead. Actors in scary movies do stupid things the rest of us would not dream of. The same could apply to investors under pressure.